the banks are obviously doing a lot of these investigating, exploring, building prototypes, piloting, and whatnot. Obviously, the regulatory environment in the US have dramatically changed from the last administration. So they're much more open in trying these things,
Right.
and thereby Morpho and yourself kind of working very closely with them. What I'm thinking though is on the other side, you still hear a lot of the banks are saying, look, they're telling Congress, right? Like stablecoin lending drains the deposits and credit from the real economy. And isn't that like a very, very conflicting views on both sides, like products on this side, but then also they're like, hey, really need to protect my turf. Where do you see that all of that going, especially given where things are from a regulatory perspective?
The settlement layer of finance is, and that moving to 24/7, stablecoins are a vital part of that. And we see this kind of settlement network of the world moving to 24/7, stablecoins being the payment infrastructure to do that. And then once we have this payment infrastructure and a method of payment, then when you hold that, then you think about, well, what's the utility around that? And every form of payment has in some way found a utility, which is like, how can I use that to be able to offer or give credit? And so what's interesting in terms of regulation, we talked about the last 4 years specifically in the US, and I remember traveling across the globe and spending time, and crypto, it's like the crypto industry just looked at regulation as saying, like, once this is solved, then everything is going to be great. I do see stable coins as actually being the highest value object for the crypto industry to be able to really demonstrate the solution to the problem. When NFTs were being launched or people were trading these coins, this didn't feel like utility and like valuable for the world. We had this like, there's this saying is like, crypto is dead, long live blockchain, because the infrastructure is actually the value in my mind. It's like and every industry, whether it's the internet or whether it's AI, they're trying to, at the start, it's like, look at this technology, how exciting it is. And the world doesn't really grab the value. And I think crypto has gone through that to the point now where infrastructure staking has been seen now as an institutional product. Stable coins, and we believe credit is next. So I think policymakers are increasingly regulating specific activities rather than treating every digital asset as just one category. That for me is the big shift. And the US now has a federal framework for stablecoin issuers and more explicit positions on tokenized securities, which is great. Europe has MiCA alongside existing security rules. And that creates clear routes into production. It's not a blanket approval for every DeFi product, but we know that the SEC is actively looking at components of DeFi, trying to understand this and think about common sense regulation.
So following on that, I mean, at the time of recording, we're almost late July now, and the Clarity Act is still on the table, right? And it looks increasingly highly unlikely that the bill would get passed. One of the sticking point in the bill is really about kind of stablecoin yield, right? Whether you can directly pass yield, can you do it through an intermediary, what kind of intermediary can that be, and so on and so forth. How does that affect some of the largest partnering clients that you're working with, the Coinbase Krakens of the world? If that doesn't go anywhere and there's no clarity, is it just business as usual because it's all these earned products already in place, or do you think it's going to go into a different direction?
I think with the innovation of technology, we will always find players that will bring the technology, demonstrate the value. And once that value then is adopted, regulators will then step in. Whether we have real clarity over the course of the next couple of months or not, I think the difference is if we continue to have traditional institutions approach this in a way in which their regulatory, legal, and compliance team are at the front interpreting and dictating what they can't do as a consequence of ambiguity.
Right.
If we do have it, we have the commercial and the innovators and the builders operating on known guidelines and regulation and being able to move faster. I don't think it stops on mass innovation or adoption. We've seen Bridge, which is part of the Stripe family, introduce OUSD with a very impressive conglomerate of partners. We've seen, the success with Circle and USD, as well as other coins. And so I think it's generally accepted that there is huge value in stable coins. And as we continue to defragment credit and payments globally, they're only going to play a more central role. So whether we have it over over the next couple of months or not, I ultimately think it just changed the positionings of the teams that kind of lead the strategy versus holding us up further from any innovation.